The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, a very impressive day on Thursday across the grains and oil seeds, led by the soy complex, but corn and wheat were not far behind. Very sharp gains, a lot of green on the screen. Good day in the outside markets as well. Was all of this move in the grains fueled by the weather? Well, that's what we're going to talk about and more today as we are joined by Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you as always. Thanks for joining us, and very wild day in this market with just, you put it to me before we jumped on, no shortage of green on the screen on Thursday, Bryan.
Yeah, it looked like a big risk-on day for a lot of grains and equities, but in particular the grains, as forecasts began to change again. And you're in one of these areas now. We talked about this last week. You get into the third week of June, and it really starts to matter, Jesse. There's a difference between we could use a shower, we could use rain, I'm getting dry, and hey, we haven't had rain for 3, 4, 5 weeks. Our crop is starting to show the effects of that. That's the theme I'm hearing this week in areas that didn't get rain, but more importantly, have had rain pushed out of their forecast or not even in the forecast. So that's the big move today. The funds we talked about have been short this market for a year, been defensive. They've been pushing prices lower, and it also looks like the technicals kicked in today, and there was a lot of what I call unintended buying. And what that means is purchases that were made today that really weren't intended at the start of the day. And that comes through stop orders being triggered. When the market goes up, it hits a buy order above the market. And then it goes, other people who are bought before, they're adding new buys because they're making money. And just people who say, hey, I need to get on board and I need to cover my feed needs. We heard talk today that some elevators were seeing a lot of inquiry from end users, cattle feeders, saying, hey, I need to make sure I have my feed covered for the rest of the summer.
Yeah, I'm glad you brought that up. A lot of that unintended buying, so to speak, coming in here today. And that's, we see that a lot in the way this environment is these days. A lot of that, algo trading, computer buying, stops triggered, etc., where we get an up day and it just accelerates to the upside. And then we have a really big up day, Bryan.
Yeah, and so what happens is a lot of times, for instance, corn rallied about 70 cents or so, 65, 70 cents, and it took about a month to do that. So kind of this nice up and back and up and back and up and back. But then all of a sudden you have days like today where things begin to accelerate. So I call that the first leg. The second leg is if there's weather concern, you get all this unintended buying, the short covering, and new buying that's developed. And up we go at a lot faster pace. And you saw the same thing in beans here. And then you get this technical buying that kicked in again today. So when I say technical buying, we saw markets move through some pretty major resistance point, moving averages, 100-day moving average, above downward channel lines, and some real earnest, what I'd call short covering. It'll be interesting to see a week from now or tomorrow through Tuesday what the commitment of traders looks like, but even a week from now to see what it looks like. Remember, those numbers are quantified through Tuesday, released on Friday. So I'll get some look tomorrow at what it looks like, but it won't represent today. And to see if that short covering was in fact one of the features, and I'm pretty sure it was.
And, thinking about the short covering, but also the weather, I'll pull up on the video feed the latest drought monitor. We see the expansion of some of that abnormal dryness, that moderate drought, even some pockets of severe drought showing up parts of northern, eastern Illinois, eastern Iowa, etc. But we think about this and also think about what's in front of us here, Bryan. We have a 3-day holiday weekend with Juneteenth on Monday.
Right.
And I know that that's going to be very interesting to see watching the weather models through the weekend with an extra day right in this critical time period, I feel like that could be a bit of a powder keg for this grain market, possibly. And it could be one way or another, depending on if rains verify or not, Brian.
Well, I'll remind you, a year ago at this time, we came back from that holiday and the markets just imploded. And December corn futures were at a much higher level, but they lost in the vicinity of $1.85 per bushel in about a 3-week window, 3 to 4 week window. So when the volatility kicks in, it kicks in, and it can kick in both ways. Right now, the bigger concern is what is going on with conditions where farmers have been right on that fringe. I need rain. Now I absolutely need rain. I don't need a forecast for rain. I need rain. And the third week of June is when that happens. And now it's looking a little more like 2012, where prices, lagged for a long time and took off. Maybe prior to today, it kind of looked like it could be 2013, where prices were in a downtrend, picked up a little bit, and then resumed their downtrend. So a lot of things to come. Stay tuned. Be well balanced, well positioned. The one market that I liked today that kind of kicked in still wasn't the leader, but we had the wheat market really had some good close to it, really solid close above the Bollinger Band. That's a technical indicator. We have not had a close this high above the Bollinger Band. I'm going back to last summer on the way up. That's impressive. A very impressive close above the 50-day moving average today as well. So good move in the wheat market. It's not the leader, but wheat could be the leader if, in fact, these corridor issues with Russia, they seem to be thinking they're not going to open this corridor in July. I don't know. We've heard this rhetoric before. I think there was a little bit of spillover strength too. It seemed like the stock market kind of today did like the idea of zero interest rate hikes. So up 400 or 500 points in the Dow at mid-session, pretty good risk on day again.
I was going to say that was going to be my next question, is how much did that lack of action from the Fed yesterday play into this grain rally today? Because I know the Fed as well said that they're still looking for interest rates later in the year to go up. They, made some moves with that benchmark rate, but they didn't make any moves for June. So how much of that news played into adding into this commodity, this grain rally here today, Brian?
Well, I think there's a couple of things. One, I think you can look at the action, which was no change, or you can look at the rhetoric. And the rhetoric was, it's kind of a tepid hawkish, if you will. Now, hawkish means higher interest rates. Yeah, they're coming, but not now. We'll wait the market, see how it looks. I think if you step back, you can analyze things to death, but I think if you look at it from one direction, it's, hey, we've had a couple of pauses. Now, as our second pause, that the Fed Reserve kind of thinks we're probably getting there. And some of the numbers think that the economic conditions are slowing down. The other thing that happened this week, it may have been a little bit of a lag, is that China did almost the opposite. They were cutting rates and raising stimulus, and they're trying to pick their economy up, but we're trying to kind of slow it down to keep inflation in check. When I say we, the Federal Reserve and the administration. So, interesting scenario there in the stock market. Good boost of confidence, though, to investors, though, and nice to see. I guess I wouldn't fall in love with. I used the word tepid before. I'm personally a little bit tepid in the equity markets that we can sustain rallies when consumers are spending more dollars on food items and other things, and they can get 5% in the CD right now.
Yeah. I think another part too in all of this is obviously the demand picture, demand issues for U.S. commodities. Weekly export sales were all right, especially soybeans on Thursday. But then again, we know that we're kind of in this balancing act between weather giving us some premium and then demand being fairly lackluster, Brian.
Right. So let's put things in perspective, and I'll just kind of take corn. So corn, you could argue, boy, maybe I don't know what the number is anymore. I forgot. We've had so many cuts in export expectations, but let's say we lowered them 300 million. Remember, weather might change the crop size 1, 2, 3 billion bushels. So while there's I'm going to say nothing else, there's not much to report on a week-to-week basis other than maybe the ethanol grind and exports. When you get to summer like this, it's all about weather, and most of the time it's pretty good, so we don't talk much about it. Or the market's trending sideways to lower, and we're talking about defensive posturing, and every inch of rain that the Midwest gets is another 3 feet onto the corn stalk and all that stuff, and timely rains. As one farmer put it today, he said, I've gotten by with timely rains the last couple of years. I need them again this year, and I'm not getting them right today. So he's in Western Iowa, getting more concerned.
We're having a conversation here today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. And Bryan, just to wrap up the grains a little bit before we talk livestock, obviously, when you have a big up day, sometimes, depending on how big the up day is or if it's a down day, it can maybe make producers stop and take a look at their books a little bit. Should they be thinking risk management wise, making any sort of target adjustments after a day like today? Should they wait a little longer? What's some risk management thoughts after a big day like Thursday?
Here's the suggestion. Take a little bit of time and step back and reevaluate. So when I talk about marketing at seminars, I do, what does great marketing look like? Well, it's time, discipline, and knowledge. And people think discipline, it's to pull the trigger. It's not to pull the trigger. It's discipline to take the time to reevaluate. Pulling trigger is a subset of that. So take the time, first of all, step back and reevaluate, kind of look at where the markets are, take a look at where they've been historically. If you don't have charts, ask your advisor, send me some historical monthly charts, look them up. The internet might have them. But take a look at big picture perspective. And from a long view, we need to be of the mindset that we need to reevaluate. So as I look at and reevaluate the marketplace, I'm looking at what's happening in the feed sector, what's happening in the grain sector, what's happening in the oil seeds, what's happening in the livestock sector. How does all of a sudden a dollar rally in corn affect the livestock industry? So one, evaluate. Two, put strategy together, and then three, this might be the discipline or the execution. Have it in place so that you can execute. Here's one of my pet peeves. We talked to farmers yesterday as an example, strategy example in corn. I suggest that they buy call options above the market. So when the market gets to a trigger point that we think it might get to, you're not questioning. You're triggering, you're selling because you've got the call option in place to cover it, Jesse. If I call that same farmer, we don't have the call option in place, and I call him and say, hey, the market got to a trigger point, 9 out of 10 times he's going to say, well, it's looking pretty strong. Let's see what tomorrow brings, or let's see what next week brings. Sometimes that's healthy. Sometimes the market flips right back down and the opportunity's gone. So I didn't mean to be so wordy, but just taking advantage of the market opportunities by reevaluating it doesn't matter what market you're in. Look at the lives. I mean, cattle, we've talked about that. They look like they peaked on the charts, but don't know for sure. But get your puts bought in cattle. Start looking at puts in corn.
Great thoughts, great advice. No, definitely things to consider when it comes to that risk management. You mentioned cattle, and it feels a little toppy in this cattle market, like you said. I mean, we did rally off the lows of the day in feeders and fats, so that's one good thing there. Hogs were fairly mixed, but livestock was definitely the follower on the day Thursday. But to your point, it just feels like, especially in this cattle market, we're kind of, it feels like we're at that point where we've maybe gone as far as we're going to go for a while.
Well, the biggest concern I've had with cattle is at some point the high price catches up to consumers. And so, today was a nice vote of confidence, maybe from the Federal Reserve, or yesterday was that, hey, maybe inflation's in check. Egg prices have come down, right? But we're not eggs. You can ramp up production. You don't ramp up production in cattle. So the way that you lower demand in cattle, or lower price of cattle, is you lower demand. And you lower demand when the market gets so high, people can't afford it. They start switching what they're doing, or they, instead of grilling out steaks, they grill out chicken. We talked, I think I mentioned this last week, where one of our coworkers, her husband works for the highway department, and they've always had a beef dinner, outdoor outing, steaks, fish this year. So, that kind of stuff weaves its way into the market. So, so that's that's my concern with the beef market is it reached some very high levels, and it gave a very prominent signal at the top after accelerating. So a lot of times, keep this in mind when markets run toward a top or a bottom, they accelerate. Sometimes you get a big signal, bearish key reversal in this case, which means a big outside day and a lower finish right at the top of the market. And since then, it's been a little sluggish. It's had back and forth, but it looks like it's topped.
Bryan, I know last week you mentioned to us about some milk dumping, and let's talk the dairy market. Any update on what you've been hearing there and just how this market is looking this week?
I hear more milk dumping, and the market has been reflective in lower prices. um, but almost the opposite of cattle. It's getting to be a really good bargain for end users and cheese plants. And so I expect that demand will all of a sudden start to surface just out of nowhere. It just shows up. Low prices have a tendency to create demand. The market is still in a downtrend, though. It still looks anemic, still in trouble. New lows posted again today in the July milk, and it's been a steep and painful downturn. Just a week ago, we were at $16.50. Now we're under $15.50. That's a big percentage change in a week. So it too, I think, is beginning to make that acceleration toward its bottom. And I'm also starting to hear more dairy producers taking action to reduce inventory. It's what you have to do. Now corn's going up. That'll be a trigger for dairies to reduce. So I think we're getting close to low, but I haven't seen the bottom yet.
Well, Bryan, in volatile market times, obviously having a trusted advisor is very key to the whole operation. I know folks can reach out to you and the team there at Total Farm Marketing to get advice and get analysis. What's the best way to reach you, Bryan?
Yeah, we've got a great team. So the advisors that work one-on-one with producers in what I manage is called the brokerage solutions. Give us a call. We got a super team here that help people out, and we can tell you about our services and products if you're interested in that. But right now, is if you have questions, good time to ask. 800-334-9779. So we'll start with that, and then if you want to shoot me an email, it's Bryan with a Y. So Bryan at totalfarmmarketing.com. Or it is Total Farm Marketing website, www.totalfarmmarketing.com. Take a look at our website. You can navigate through that and see what we offer. Been around since '85, so we've got a lot of experience and a lot of veterans and a lot of people who are, used to putting good strategy together in these type of market environments.
Well, of course, we appreciate the time and the insight we get from you each and every week, and we will wish you an awesome weekend. Bryan Doherty with Total Farm Marketing. Thanks so much for joining us here today, and we'll talk to you next week.
Always my pleasure. Thank you, Jesse. Great work.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.